Today, we are going to do a fundamental analysis of the stock KILPEST India Limited. This is going to be a kind of an exercise for us to analyze a stock and find the intrinsic value. So please stay tuned, and before going further, don't forget to like and subscribe for more such videos. KILPEST is an agrochemical company with about 50 products, established in 1972 and listed on BSE in 1996. It's based out of Bhopal and established by Mr. R.K. Dubey, a certified ISO 9001 company entering into biotechnology too. More importantly, it has a subsidiary called 3B Black Biotech, which is into molecular diagnostics. It developed a brand of kits called TRUPCR. The TRUPCR real-time COVID testing kit gained great popularity and also USA FDA approval. The company basically operates in two segments: the agrochemical and the molecular diagnostics. Let's talk a bit about the agrochemical industry in India. What are agrochemicals? Agrochemicals are the chemicals used in agriculture like fertilizers, herbicides, and insecticides. The company is also into bio and other public health products. The agrochemical industry is a 42,000 crore industry with 50% of its consumption in India. The Indian market accounts for 15% of the global industry and is expected to grow at 8% CAGR in the coming 5 years. There are some opportunities ahead, like many patents going off patent, giving our Indian companies a chance to develop generic products. We are already using less agrochemicals next in line to US, China, Japan and Brazil. Hence, there is a gap to be fulfilled. With the rising Indian population, there is more need for food and hence a need for more crop yield and protection. Let's talk about the molecular diagnostics market. Molecular diagnostics is all about analyzing proteins, DNA and tissue to identify beforehand certain genes linked to potential diseases. The Indian market currently stands at $920 million and is projected to grow at a CAGR of 10% in the coming 5 years. With more and more viral and bacterial outbreaks in India, rising fatal diseases, the future looks promising. The spread of COVID is also an opportunity for such businesses. More government initiatives are expected in future. Let's look at the income statement of KILPEST for its performance over the past decade. Do you see something phenomenal here? The latest sales figures show almost a whopping 7-fold increase. Can you guess the reason? Look how the operating profits and other earnings increased. The obvious reason is the TRUPCR COVID kit developed by its subsidiary, that is 3B Black Biotech. The kit also gained US FDA approval. Please note that these are consolidated results, meaning the results of both the parent company KILPEST, which is into agrochemical products, and also the subsidiary 3B Black Biotech, which is into molecular diagnostics, are included. Now let's look at the standalone report, meaning the performance of the parent company alone and not the subsidiary. If you compare the consolidated sales figures with the standalone figures, you can clearly see the difference. The consolidated report includes the subsidiary, which reported a marvelous performance compared to the parent company. If you got this point right, you can figure out if you want to buy this stock or not, or if you need a long-term stance on it. Subsidiary alone contributed to 90% of its profits, that too mostly due to the COVID kit. Having said that, let's look at some more numbers of the consolidated report to get an idea of how the parent company is performing. Do you see the negative figures in the sales growth? I understand agriculture is monsoon dependent, but comparing the results with its peers did not give me satisfactory answers. Look how the operating profits dwindled. I am more concerned about operating profit than other sources of income. because it tells me how good the company is at its core business. I'm not convinced and rather perplexed about this figure of dividends. They probably must have had surplus from previous year. Either way, could have been reinvested in the business for better wealth generation. So if I have to say good things about the parent company, probably low debt. Debt is not a bad thing for a company, and company needs more money for R&D and other areas. So long as a business has good coverage for debts, debt is not bad. With a loss of interest in its operational performance, I am no longer interested in other metrics like PE or PEG ratio. One major negative point I found is that the debtor days are not impressive. People may get confused with the consolidated debtor days. You need to look at the standalone figures because the subsidiary this year performed well, and that may be a short-term trend. The promoter or FII-DIR shareholding is very minimal. Let's look at a very important parameter in comparison with its peers. The price to free cash flow, meaning for each rupee of the share price, how much net cash flow is being generated. This ratio is unfavorably high. The R&D expenditure, which is very crucial for an agrochemical business, is very less. Overall, I am not very much impressed by the operational performance of KILPEST as an agrochemical business. I am not interested in betting on it as there are many risks associated with agro industry like erratic monsoons, low infrastructure, high R&D costs and many more which bigger or mid-sized companies can handle well. Maybe this company's agrochemical business will flourish over the long run. Let's take a quick look at its subsidiary. As you see, it's a major contributor to its parent company, especially during the pandemic. The molecular diagnostics is gaining prominence globally. There are certain risks and limitations with the penetration of molecular diagnostics in India, like high cost, lack of skilled personnel, because of which I feel it might take a long time, maybe 10 years, to see a real change in this segment in India. To conclude my analysis, I would like to take advantage of the competitive edge this company has during the COVID situation due to increased need for testing and the kits. But this may be a short-term boom, maybe 1 year, before which I would like to exit. I am not hopeful of the agrochemical business, but given the good monsoon forecast and many patents going off-board, I have a bit of hope for the parent company as well within this 1 year. I am hopeful of the molecular diagnostics segment, but to reap real benefits from this segment, it will take a long time for our markets to mature. Overall, I would like to buy and hold it for probably a year until the COVID situation subsides.